welcome to this explainer. Okay, I want you to think about the absolute smartest, most accomplished people you know. Got 'em? Now imagine those same people completely falling apart, reduced to literally pure panic just by staring at a blinking screen. It sounds crazy, but today we're gonna unpack that exact mystery. We're diving deep into the brilliant insights of Mark Douglas from his legendary book, Trading in the Zone. And honestly, what we're about to explore is going to fundamentally shift how you view success, failure, and the market itself.
So it really begs the question, right? Why do these brilliant minds fail at trading? We're talking about doctors, elite engineers, high-level CEOs. These are people who have absolutely conquered highly demanding, complex fields where hard work directly equals success. They know how to climb mountains. But the absolute second they step into the completely boundaryless environment of the financial markets, that whole equation just breaks. Why does a place with seemingly infinite potential for wealth act like a massive brick wall for these high achievers?
Well, let's look at the numbers. And honestly, they're a massive reality check. The data shows that 95% of traders lose absolutely all of their money within their very first year. Yeah, 95%. For the vast majority of people stepping into this arena, it's not this smooth ride to steady wealth. Instead, they get thrust into this incredibly painful cycle of fear, anxiety, and this terrible feeling of betrayal. The money is just dangling right in front of them, only to slip away again and again. In the end, only a tiny 5% become elite, consistent winners.
So how on earth do you escape that 95% trap? Well, Mark Douglas spent decades as an elite trading coach dissecting this exact problem, and his discovery is a total game changer. The secret to joining that 5% club? It has absolutely nothing to do with finding some magic market indicator. Consistency isn't something you can just buy in a software package. It's forged entirely by mastering your own internal mental environment. To really get why mindset is the whole ballgame, we kind of need to look backward for a second. Let's take a quick trip through time to see how the trading community has desperately tried to crack this whole market unpredictability code over the years.
Back in the 1970s, it was all about fundamental analysis. Traders were obsessed with mathematical models, weighing all these economic variables to predict where a price should logically go. But there's a pretty glaring issue there, right? Models don't move prices, people do. So in the 1980s, there was this massive shift toward technical analysis. Traders realized they could look at charts to analyze collective human behavior and find statistically reliable patterns. And hey, it was way better because it focused on what the market was actually doing. But that brings us to the present era, mental analysis, because as it turns out, even with the best technical tools in the world, people were still losing their shirts.
And they were losing money because technical analysis created something Douglas calls the execution gap. Basically, this is the massive psychological void between accurately predicting a market move and actually executing it. Imagine this, and it's painful, I know. Your finger is hovering over the mouse. You've read the pattern perfectly. You know exactly what the market is going to do next. But suddenly, this wave of pure fear washes over you, and you just freeze. You can't pull the trigger, and you have to sit there agonizingly watching the market do exactly what you predicted, while all that potential profit just slips away. That right there is the execution gap.
So why does this gap even exist? What makes trading so uniquely hazardous to our brains? It really comes down to a massive clash of environments. Think about it. Society is built entirely on strict structure. From the time we're little kids, we're surrounded by external rules and boundaries. You reach for a hot stove, a parent yells no, and that boundary protects you. But the market? The market is like a vast open ocean. It offers unlimited, boundaryless freedom, and trust me, it does not care if you know how to swim.
Just to put that into perspective, even if you go to a casino, the rules force a structure on you. You have to place your bet before the wheel spins, you know exactly what you're risking, and the game has a very clear, definitive end. But the market? It's in continuous motion 24/7. There are absolutely zero external forces telling you when to jump in, how much you should risk, or when it's time to walk away. It is pure, unfiltered freedom.
And because of that extreme contrast, Douglas pointed out something super profound. He said, if you lack internal mental discipline, this unlimited freedom inevitably leads to self-sabotage. The harsh reality is that without a boss looking over your shoulder or a casino dealer managing the game, the market is simply never going to protect you from yourself. If you operate in that boundless space without strict internal discipline, it is a guaranteed path to financial ruin.
Now, this total lack of external boundaries sets up a seriously devious psychological trap. It's almost tragic, really, because pretty much every novice who steps into the arena falls into the exact same four-step cycle. Let's walk through it together.
Okay, step 1, it usually starts with pure euphoria. A novice throws on a trade with zero fear, mostly because they just don't know the dangers yet. And they actually win. But because that win wasn't built on real discipline, step 2 hits hard. A devastating, shocking loss. The joy completely vanishes, and in step 3, it's replaced by this feeling of deep betrayal. So what do they do in step 4? They go looking for revenge. They mistakenly start overanalyzing chart variables to try and prevent future pain, completely ignoring the fact that their own faulty mindset was the actual culprit the whole time.
Which leads to a really fascinating question. If training without discipline causes all this severe emotional and financial pain, why not just stop? Why do we keep coming back for more punishment instead of just closing the laptop and walking away?
Well, the answer is literally hardwired into our biology, and there's this classic psychological experiment with monkeys that explains it perfectly. Check this out. If you consistently reward a monkey for doing a task, it learns the behavior. If you suddenly cut off the reward, the monkey quickly realizes there's no point and just quits. But, and here's where it gets crazy, if you reward that monkey on a purely random schedule, and then cut the reward off entirely, the monkey will just keep pressing the button indefinitely. The brain actually becomes biologically wired for addiction to the mere possibility of a surprise reward. And the market? It's the ultimate random reward generator, perfectly designed to strip away our discipline.
So, knowing that our very biology and psychology are stacking the deck against us, how does the active trading population actually survive out there? Let's zoom out for a second and look at the actual math.
The breakdown is pretty wild. Consistent winners make up just a tiny 10% slice of the pie. About 40% are consistent losers. But the largest group, literally making up half of everyone trying to trade, falls into what is arguably the most frustrating, volatile category imaginable, the boom and busters.
So what exactly is a boom and buster? Well, these are traders who genuinely know how to make money. They can string together brilliant weeks of winning trades. But because they lack psychological control over their own euphoria, their equity curves look like extreme roller coasters. The second they get overconfident, euphoria just completely takes the wheel. They abandon all their rules, they bet way too big, and the roller coaster plunges, inevitably giving every single dime right back to the market.
And when these traders finally bust, they fall straight into the black hole of overanalysis. They start hoarding endless market variables, like Fibonacci retracements or complex oscillators, clinging to them like a safety blanket. But here is the really profound truth of the matter. Gathering endless chart variables is actually just a subconscious, futile, fear-based attempt to completely eliminate risk. They're just trying to avoid the pain of being wrong. And in an unpredictable market, that's literally impossible. Okay, so what's the way out? How do we break this novice cycle and escape the boom and bust trap for good? It requires a definitive and honestly somewhat uncomfortable paradigm shift. You have to adopt the ultimate solution, the only mindset that actually guarantees consistency. You have to start taking absolute responsibility.
The absolute foundation of that responsibility is accepting a really harsh reality. The market owes you nothing, nothing at all. It is a completely neutral zero-sum game where every participant is just trying to extract money from someone else. The market's sole purpose is just to provide an endless stream of opportunities. It is absolutely not there to fulfill your hopes, stroke your ego, or make you whole after a bad loss.
Taking absolute responsibility is tough because it demands strict internal requirements. It means owning the fact that every single outcome is self-generated by your own actions. You've got to fully embrace the inherent risk before you even enter a trade. Like, you have to accept that money as gone the moment you click buy. It means executing your trades completely without fear, building up the internal restraint to recognize and shut down your own euphoria, and perhaps most importantly, permanently stopping the toxic habit of blaming the market for your losses.
And that brings us to the big provocative question I want to leave you with today. Are you ready to stop analyzing the charts and start analyzing your mind? Because as long as you view the market as an adversary, you're going to be locked in a cycle of pain. The consistency you're so desperately searching for, it isn't hidden in some flashy new indicator. It's hidden right there in your own internal framework. Master your mindset and you absolutely master the market. Thanks so much for joining me on this explainer today. Keep learning, keep growing, and I'll catch you next time.